So today we're going to do a review from yesterday's price action as well as from Tuesday's price action and obviously general Q&A. So if you're new around here, you can put any questions related to ICT or the previous markets or psychology in the chat and we'll get those answered. And obviously I'll do the review first. So feel free to post any questions in there and we'll get to them at the end. There's also a couple of questions in the general chat that I have to go through regarding yesterday's tapering stream, so I'm going to get through those as well. And obviously, if I forget anything, let me know. Okay. So, hopefully, you saw the tape reading stream from yesterday that's posted up. If you've not, there's a pretty decent setup from last week that I think you'd appreciate if you saw the early. Why does TradingView do this? The early outlook. So, from this week, let me pull up the economic calendar. As you know, today is Thanksgiving, so happy Thanksgiving to all if you celebrate or live in the U.S. It's a weird week if you have not played with it before. So we have, here's the economic calendar. And if you saw the weekly outlook that we did earlier, I think it was on Monday or Sunday or something, I gave you days and expectations for each of those days. All right, I told you what days are going to be high probability, what to expect, and as a result, how you should treat and approach and create protocols for each of those. So we talked about how obviously there was Thursday, there's no news here, and a bank holiday, so limited movement, expected consolidation. Same thing with Friday, right? You have limited liquidity available and volume available. So in terms of a weekly profile, you're not really going to see a lot of movement at the end of the week, or we're not expecting to see any movement later in the week. It gives you about 3 days to find a high quality setup. My sound isn't on? Everyone hear me properly? So tell them to restart if anyone has that issue. So most of our attention in terms of higher time frame movement and a weekly / daily / session alignment is going to be focused on Monday through Wednesday, right? And if you saw this week, spot on, Monday, Tuesday, Wednesday, all pretty high quality price action, or at least for the most part, printing up towards those relative equal highs. So that was kind of spot on what we were looking for at the start of the week. And thankfully we got some pretty solid movement where it ended up printing very nicely. At least to look at the 1 hour chart. I think just a very nice continuation setup you got on Monday, retracement on Tuesday, and same thing on Wednesday, just very slight retracement where it pops up and took out the previous weekly high. So Tuesday, there was no tape reading stream. Instead, it was just a bunch of chats we put into the predictions chat. So I'm not going to go too much into Tuesday, but in terms of higher time frame PD rays that you're looking for, you had a New York Open reversal profile on Tuesday. You had bias liquidity from previous daily high. You also had the previous weekly high, previous daily high and previous weekly high up here, those relative equal highs. So these relative equal highs, since Monday was acting as the draw on liquidity for Monday through Wednesday, at least for me, I hope you as well. And on Tuesday, you have obviously these PD rays that should be marked out. So in this case, you have the discount 1 hour gap. We're looking for daily reversal points. That's going to be something of interest, is this 1 hour IRL and then the 1 hour ERL. So for the daily movement of Tuesday, those are PD rays that if you had struggled with bias, something of interest that you should be identifying beforehand, before 9:30 prints, as to where the likely manipulation PD ray is, number 1, and the distribution PD ray, number 2. So I'm not going to focus too much on Tuesday's PA, just for time's sake. We're going to focus majority on Wednesday. So Wednesday, we had, like I said, our protocol for this week is the idea that if the market's going to move, it's going to want to get there preferably before Thanksgiving. All right, it has 3 days where the volatility is going to be sufficient enough to get us towards any sort of meaningful POI. And that's kind of the approach that at least I took going into Wednesday. Wednesday, we had not tagged the higher time frame POI, which would be the relative equal highs and more importantly, this previous weekly high. And we were still inside of that range. So is there a reason for Wednesday retrace back inside the range and Thursday continue up higher or Friday continue up higher? Unlikely. Most commonly, it's just going to run right for that liquidity and kind of finish off the week. And you see exactly what it's doing today. So bias for me going into Wednesday was bullish. We had 1 hour supporting order flow, 4 hour supporting order flow. and ideas here is based off of that. So inefficiency in this case, and premium of that range, lining up with the new week opening gap. Not important that you have that in mind, but inefficiency and discount of that dealing range. Also, if you're looking for meaningful manipulation, New York Open drops down, takes out the London low, stays within the gap. And then on the 15-minute chart, not 15-minute chart, you see minor displacement coming out of that range. I would have liked if you saw displacement at the top of the order block and you have a nice clean breaker with a gap and we have held that. Obviously, you don't get that. So instead, you're looking at, since there's no valid breaker with displacement, discount of that dealing range prior to 9:30 preferably. But as 9:30 prints, you have to respect that. And you have inefficiencies. You could use the 1 hour gap, but when we're talking about the swing low, we're looking at these discount PD rays down here, right? This one and preferably this one. Quality good? Is the quality messed up? I can restream if I need to. It says 1440 at 60, but I'm also recording. If the stream quality is bad, let me know. Everyone can see properly for the most part. Slightly grainy. Okay. I'm not going to worry about it too much. If it becomes a problem, let me know. But anyways, you have discount for value gaps here. The price is trading into. And preferably, like I said, if you have a New York Open reversal profile, which in this case, if you deem the New York Open low to be formed at 7 a.m. here, would you need to see this taken out? You wouldn't. It can, but obviously before 10 o'clock, it could still run this swing low out and have a bullish profile, and there'd be no problem in terms of the profiling there. Now, this is obviously up to you. So you could obviously look for the fair value gaps to be traded into at the Judah swing open and expect it to hold those and see a reaction off of it. Or you could just say, okay, I'm going to play to see off the reaction. Either you wait for the gap to be traded into and you leave and you take a setup off of that, or you wait for the swing low to be ran out before 10 o'clock and then it displaces after that. Either way, whether you're marking out the gap or the swing low, you should be able to see on a lower time frame the reaction you see, and then obviously the SMT printing and say, okay, that's where I expect it to start turning and heading for higher prices. So on Wednesday, we had 8:30 news. So your key times, as you know, 8:30, 9:30, 10 o'clock, preferably to see that swing low form and have some sort of meaningful manipulation. As we go into the lower time frames, let me pull up actually the proper chart here. As we get into the lower time frames, you have a couple different things to be looking out for. 9:30, okay. I had a question about this on a one-on-one call yesterday, I believe, which is, okay, when you get to the 15-minute chart and maybe you're slightly bullish looking at the higher time frames, you get to the 15-minute chart and you see 9:30 run out the London high. You say, okay, it ran out the London high and you see it starting to trade lower. Do I flip my bias? And this is the problem where you have different data on different time frames that sometimes is opposing each other, or you don't know what to emphasize, this data over this other data point. And what you should be doing is, with the top-down analysis, as you look at the 4 hour for the weekly movement, as you look at the 1 hour to determine order flow for the daily kind of movement, and then as you drop down to the 15-minute, the 15-minute should be used as confirmation. You should see it confirming already your pre-existing bias with the H1. You should not be looking at the M15 and say, okay, what is London doing? What is New York doing in relation to London, and try and determine a profile just by looking at it. You should already have a bias in mind, and then now see if you can formulate a profile with that bias in mind. If it doesn't make sense, or it's clearly one-sided the other way, and there's no signatures in here at all that represent a bullish profile or the profile that you're expecting, then sure, you can go back to the 1 hour and reassess. But if I'm bullish on all higher time frames, weekly perspective, daily perspective, I'm not talking about the weekly and daily charts. I'm talking about that range of time, the entire daily from midnight to close. You know, that daily time frame is moving higher. I'm not going to let the 15 completely skew up that analysis. I'm still going to take it into account, but this is where you need to place emphasis on what is important and what isn't. So at 9:30, sure, we run out the London high, or right before 9:30, run out the London high. Okay, if we're bearish and we already had a pre-existing bearish bias, that would be evidence for maybe the swing high of the day, or maybe something to initiate another sell program where we can get shorts off of it. And this is where it's confusing, because in one scenario, you're bearish, okay? And if you just pattern it, this is going to be your problem. you say, okay, it's running at London high here. And in this case, it gives me sell opportunity and it continues to sell off until 12 o'clock. Other times, you see it run at the London high, like in this case, and it just gives you a discount retracement and moves higher. What's the difference between those two? Bias. Okay, so full emphasis on that over profiling, over trying to pattern it. If you're trying to do that at the start, or if you're placing too much emphasis on the 15-minute chart and trying to get confirmation there, you're going to end up either getting caught flipping biases and always just looking for momentum trades. You never can get your entry. You're always taking trades after the fact. And you're also not going to be able to have a very strong bias because you're going to be constantly flipping. And what happens is as you drop time frames, eventually from the 4-hour all the way down to the M1, you're looking at all the price action and the order flow with the same value. And now on the 4-hour, you're bullish. And then the 1-hour, you're bearish. And the 15-minute, you're bullish. And the 5-minute, you're bearish. And you get the idea. So you have to place emphasis and know, okay, this is what I'm looking for. Let me see if there's confirmation on a lower time frame. If there's blatant disrespect or some other idea that's showing up in a lower time frame, you go back to the higher one and see, okay, can I reassess? Don't get caught up in that idea of as you drop and drop and drop, you keep flipping back and forth. That's probably evidence of 50-50, or you don't really know what you're looking for. But I'm going to bring that up because it's a good point. So the overall draw is higher. So as we're running a premium ERL, right, in the form of London High, it's still a time-based ERL, you have to look for what is it going to run back into? Discount and efficiency. So this run into the buy side here, right at 930, is still potentially going to create this discount retracement. And since we don't have any manipulation at the 830 news, since we don't have any manipulation right at 930 away from that DOL, it's likely to see that you see this run lower. So ERL to IRL opposing, obviously, the higher time frame draw on liquidity. When you're looking at the daily perspective, so the 1-hour chart, you're going from inefficiency to liquidity still. So the entire session move, you could frame either way, doesn't matter. But when you're looking at, obviously, this premium swing high and worrying, okay, is this going to create some sort of drop of doom that I'm not expecting? You need to know how to place emphasis on certain PD rays and certain time frames over the other. All right, so runs the London high at the 930 open and drops back down into discount of that dealing range to offer the manipulation for the session. All right, and like I said, it's allowed to take out the 7 a.m. low if it needs to, before that 10 o'clock, and that would still be okay for a New York Open reversal bullish profile. This case, it decides to leave that intact. It sees this as meaningful manipulation, low of the day, and you still have a low of the session opportunity being offered during the during your time that you'd be studying. So on a 5-minute chart, that's exactly why you wouldn't see this, or maybe this as some sort of shift. I mean, short term, it would be fine. You could use it as a short-term sell idea, but you don't say, oh, this is my 5 minutes SD, then I'm going to start looking for 1-minute PD raise to short it until 11 o'clock. Okay. And that comes with the discretion, that comes with the skill of knowing what your filter is. Your eyes are filtering the data that you're seeing. All right. So as it drops into, like I said, the macro time, and going into the rest of the day, we drop into discount there right at 10 a.m. Okay. Bullish profile, with time dynamics, if you're bullish in the New York session, you want to be seeing, you've heard me say this plenty of times already. So if you're new here, this is a one-time thing, but if you're old, opening range, that's a very messy handwriting there. 9:30 to 10, other end, 10:30 to 11, right? So as it drops into that discount PD rate right at 10 o'clock, in a best case scenario, that is your low of session, right? And that'd be something to be mindful of. Now, actually, let me reload this. There's a little gap there that shouldn't be there. When you see opening range print and it's not clean, okay, and what do I mean by not clean? Do you see one-sided price action delivery? Do you see breakaway gaps being left? Do you see lots of wicks? A lot of these things are telling you what you're likely to determine as a result. 9:30 opens up, runs the London high, gives you a tiny fair value up there. You could look at that as FPFEG if you want. Trades up into it, moves higher again, then it comes back down. This is range-bound price action, right? You see this kind of double movement, and then it drops down again with displacement. Bunch of different PD rates. So is this clean necessarily in terms of an opening range? I would say probably not. You can look at this as a double Judas swing or whatever, but it's not a textbook 9:30 drop down, 10:30, 10 o'clock expand higher. So as a result, you have to be approaching price action with caution. Okay, you can still get a textbook entry. You're probably gonna have to keep a wider stop, but this is where you're gonna have to end up pulling out more difficult entry mechanics or entry tools in order to find a good high quality setup. So if you're newer, this is either going to be a day that you lose on because you simply don't have the experience of knowing what kind of price action is going to unfold. So you end up taking an entry that's still high quality, you lose on it. Perfectly fine. Perfectly fine if you review it, I guess, is the proper way to look at it. Second scenario is someone who's more experienced will know, okay, this isn't the price action that is going to support my idea of, a unicorn setup or whatever. So I need to play it safe. I need to wait for extra confirmation. I need to wait for added PD arrays and added signatures that tell me, okay, finally now it's in its buy program and going to head for my draw on liquidity. All right. So inside the daily bias I posted for the private group, very, very brief bias, but same bias as yesterday. We'll try and do a short tape reading stream today or / an active review. And that's what we're doing as we walked through kind of the predictions chat, what I was looking for. So I did not stream right at 9:30. I started the stream around 10:20 or 10:30-ish. So as I'm looking at this, I'm obviously looking for the manipulation first because I don't think it has manipulated. 8:30 doesn't do much, right? 9:30 doesn't do much. 10 o'clock drops down into the range, forms an expected swing low. So I'm watching now to see, does this low want to be protected? All right, if that low is protected, I can assume now we're going to see expansion into 11 o'clock and start to tag those higher time frame drawn liquidity pools, right? So in here, runs up, you have not a BPR, right? You don't have this nice closure through here. So no BPR forming, drops back down into the 15-minute gap, and then it leaves, and you have in here the first presentation bisi. Realistically. Now, okay, you're looking at gaps, you're looking at PD arrays. This is one question that we had in the general chat. Let me pull this up actually quickly to reference exactly what he said. But Kosami asked, could you please explain the difference between a gap, inefficiency, or fair value gap? How do you expect them and price to react off them differently, or does someone have a good video? So this is the classifications of gaps, okay? Fair value gap is a broad term. It's like the subheading of certain species, right? You have genus of a species, and then you have the lineage or the specific function of whatever animal it is after that. So fair value gap is a very broad term. It's like the kingdom, I guess, of PDRs in this case. Obviously stands for fair value gap. Underneath it, you have different types of gaps. Okay, you have bisis and sibis, which these are deemed inefficient. Okay, sell side, buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency. It doesn't matter, you know the acronyms or whatever. Just look at these as when you're talking about fair value gap and you mentally think of a fair value gap that you want to hold. These are the ones that you want to be seen, right? As your kind of textbook entry, fair value gaps. Other times you have, other things like breakaway gaps, and you have, IFVGs, which is another classification. You have, your plain old fair value gaps, which is kind of just those efficient balanced price ranges of gaps. So you have a bunch of different ones. And in the beginning, that's something that's very confusing and challenging because they're all the same signature, which is just this gap. You have other ones, even I could say liquidity voids and volume imbalances. These are all types of gaps in price. So bisis and sibis are the ones that when order flow is in line, these are the ones that you preferably would want to see hold. Scenarios where these wouldn't hold is if you have multiple of them in a range, and obviously it wants to seek discount. Okay, then sure, it's going to drop through a couple of them, seek discount, and then as it trades away, you should still see a reaction off of these. Okay, so these are like your standard ones that you mentally will think of as a gap. A lot of these other ones, like breakaway gaps, BPRs, those ones specifically can a lot of times be left open. So you want to treat them as such. You expect them to be left open. You don't expect price action to trade into them. You a lot of times don't get a setup off of breakaway gaps or BPRs and things like that. IFVGs and liquidity voids, we can go really far into detail. But when you're thinking about this algorithmically, a gap that is balanced or has already been filled in a certain manner or deemed not to be inefficient, price action is going to want to come back into an area of efficiency or balanced price range and offer you the kind of fair value gap trade that you expect. Ones that are more inefficient are more likely to be used as fair value gaps that you want to trade off of. Okay. Now, this takes skill in order to determine them. And there's not, at least from my understanding from ICT, there's not like a rule book, a concrete rule book that he's posted in a video as to how to determine and treat each one. You know, there's always new videos coming out of him using this and this technique. So I try to simplify it for my own purpose, but I'm obviously going to be incorrect sometimes in the way that I mark them out, which is perfectly fine. So if you see a lot of price action working in a range and you see a tiny gap inside of that range, you expect it to be balanced or a fair value gap. When you see a gap that's leaving a tight range or some sort of balanced work, expect that to be imbalanced. So when I see a gap like this, and we see, okay, right in here, working, right in here, we just had a bunch of sell orders filled, buy orders filled, sell orders filled, buy orders filled. Is this going to be seen as inefficient, more efficient or more inefficient compared to this gap here, which is actually leaving that range of PA? I would deem this more inefficient than this. Okay. So if I'm looking to take a trade, this is the kind of gap that I'd be using. Now, there's other techniques you could say, okay, there's going to be discount and order blocks that you got to incorporate in. But when we're just talking about these two gaps, this is the way that I would grade them as such. You have balanced gaps and you have imbalances. All right. So it's definitely a difficult topic to fully unwrap because there's so many different variations and instances of what they look like and how to treat them, where I cannot say, here's a clean cut way. I can give you this broad example, but until you really see it and study it, it's going to be challenging to assign the proper names and uses for them. You just got to get them wrong and right, and you kind of get the flow of things. It's not too challenging. But that kind of goes into what the second part is here, which is the entry, and what fair value gaps you can cut through the candles to be and such. So, like I said, drops into the PD right here, 10 o'clock. We're watching to see, does this low want to be protected? As it leaves, this becomes our first instance of a bullish PD ray that would catch my eye. You have an order block plus a fair value gap here. All right. And both of which you want to study to see, do you have some sort of reaction off of it? Now, what we're forgetting here is a very good filter, which is obviously the 5-minute order flow. So when you're looking for a bullish PA, we want to be making sure that the 5-minute chart, and I say these things from a teaching perspective to someone who's maybe intermediate level or beginning level. So those who are advanced, you're kind of expected to know these things and extrapolate from what I'm saying. But I'm saying this from a very easy teaching standpoint, so someone who's struggling will understand, okay, why certain things are working, why they aren't. So on a 5-minute chart, you see this 955 candle come down, and you got an imbalance forming here. All right. As price trades up into it at 10:05, price is going to see this as an imbalance and a premium imbalance. What is it going to look for after that? Which is a discount PD ray. All right. And since this is an IRL, what preferably would it run for? An ERL. So since the bias is bullish and this is still a premium PD ray, in this time frame that you're looking at on 1-minute chart, this is exactly why you don't see it. Preferably you would have cleaned this entire thing. You would have traded up, formed a gap above it, and you use it as a breakaway gap or balanced price range. Trades up into premium inside of that range, and then it comes back down and disrespects discount of that range in that order block to then come back and sweep the sell side liquidity. All right, and when you're looking at price action like this, sometimes this is challenging to see, and like I said, this is going to be something that you either take a loss on or have to learn from. But when I see price action like this be very choppy and not be one-sided, obviously, as soon as it hits 10 a.m., is it going to clean up? Most times no, unless you have 10 a.m. news. So when I see it choppy like this, do I expect it to instantaneously start holding 1-minute PD rays and just be bullish all the way? Probably not. I would want to see some sort of secondary confirmation that would tell me, okay, I can get in and start leaving. So if in this case, especially since the 5-minute order flow never changed, this is something that either you have to anticipate or you have to learn from. Where this is just, it's unfortunate PA. Okay, you're not going to be able to anticipate all the time, but it's coming back into discount, sweeping the sell side. Okay, and after it does that, now it finally leaves and you get a 1 minute gap forming here. All right, now you have a low, high, lower low that runs out, not a higher time frame pool, but still a pool of liquidity. This makes this up closing candle range seen as a lower time frame breaker. Either way, bullish order block. Okay, so as price is displacing here, you have a high quality bullish order block after it ran the low, and you're also inside a silver bullet time with this low being placed in during the opening range. And you're expecting this high to be printing after 10:30 to 11. You have multiple things in line. Okay, you have higher time frame order flow, H1 and 15. You have now the 5-minute order flow in line with that bias. Okay, you have 1 minute PD starting to hold and print. You have time dynamics assisting you and where the likely drawn liquidity is and where it's going to be hit. And obviously you have pretty clean targets with the ideas of the relative equal highs up here being very smooth. So my entry, the one on Friday you saw on stream, was off of the reclaimed bisi, but more so on this gap. But entry was off of, I think, 1028 and 1027, something like that. Partial op at the swing high, the buy side here, and then full pull at the previous weekly high up here. And I left a runner for post 12, which eventually just got SMT'd, but that's just unfortunate. But a weird PA to be in, to be honest. And the second question, which would be, which fair value gaps do you cut through? I think it's from the same guy, but let's go back to general chat. Talked about also include, if possible, which gaps I can draw out in time. For example, in the tape reading, you use a reclaimed bisi as an entry. Why did you draw this one out in time and others not? Thanks. So another good question. So let me actually pull up. Actually, I'm not going to do that right now because it's not relevant. He's talking about, okay, why did I pull out this bisi here and go long off of these right here, and not draw out the other gaps? Okay. Now this kind of comes back to what kind of gap this is. I see this as a bisi. Okay, whether it is or it isn't, I guess isn't really super relevant, but it's leaving a balanced price range that I see down, up, down, leaves it. First gap outside of that range, I see this as an inefficiency or a bisi. Okay. Since this bisi was not used here, right? It was not used as a buy side imbalance. You saw it drop in a discount and leave it. Okay. Since it was improperly used here and traded through, this does not make this an IFVG. Okay. That's still based on bias. It's still a bisi. Okay. Price didn't use it here. As price trades up and displaces again and forms a gap and stays within here, after, key point is after now, we're in buy side delivery and in a buy program, and it determined also to be on the right side of the SMR. Okay, at this point in time, we're confirmed, or at least I thought to be confirmed. We're in buy side delivery. We're in the buy program. We're on the right side of the SMR curve. So we can trust, or at least fall into, the idea that discount PD rays, bullish PD rays are going to start to hold. So I didn't see any reaction out of that, this inefficiency here, the first time it's being used. As it runs the stops and as it leaves, and like I assume that it's going to be in this buy program, this is still going to be a point of reference. Still going to be a point of reference. Now, is it important that you do this all the time? It's not. And it's a very niche type of entry. Okay. You could still just focus on the fact that we have a run stops, a fair value gap here, plus a bullish order block. That should be really what you're looking at. And without this, that's perfectly fine. But what you want to be doing is this fair value gap plus order block, plus obviously key time of silver bullet. That'd be something to study. Now, when you overlay that with the reclaimed bisi, that is something that you'd be identifying as a confluence of PD rays. So I don't use these a lot because, to be honest, they're very far and few between that I would actually find any use from them. But another one that you can mark out in time is something like this, right? This is leaving. Remove all this. This is leaving. It's working all the way in here, and then it finally is starting to leave that range, right? So that you can look at this as a bisi as well. What the heck just happened? That would be a bisi as well. And you could also draw this out in time if you'd like to as well. I just don't do them because I think it's annoying. And I also just don't, there's more PD areas that I could use. But this is another idea here. Doesn't get used here, doesn't get used here. But then as it leaves and it says, okay, we're back in discount of that range, tagged into discount, and now we're back inside a buy program, back inside the right side of this short-term MMXM that you see in here. It's going to still reference this bisi because it's a bullish PD array. So you can see the reference here. You also can see the formation, like I said, the presentation of other PD arrays that price should hold, which is the order block plus that inefficiency. So you could say either one. And I don't think it's important that you understand when to always mark out a reclaimed bisi and when to use it. Because like I said, I think it's just a niche and it's fancy more than repeatable in 90% of price action. So it's not needed that you know how to use it. It's probably needed that you know how to understand it and read it, but I'm not using this to assist in my order flow. I'm more concerned, if I was reading this live, more concerned with, this gap holding and this order block holding than this reclaimed bisi. And you could do this with a ton of different things. You could probably do it with this one as well. You see it right there, right? It's still a bisi being left out of a balanced price range. So that's a gap that should be used sometime in future for a rebuy opportunity, and you could do the same thing with this and whatnot. But I think it's extra. I think it's OD, so I end up just not using it. But, every single IFEG balanced price range or whatnot, you can cut through the candles. So it's a good question. I think it's very niche, but yeah, I'm imbalances, proper imbalances or bisis and sibis, you draw them out in time. Breakaway gaps, balanced price range type of gaps that you see, I'm typically not drawing those out in time and expecting some sort of reaction out of them. Okay, but it's part of the game you got to play. It's like, okay, what PDAs do you want to mark out? What's important to you? I'm extra with the way that I tape read. I like to be on a 1 minute chart very precise and try and read every single 1 minute candle. So the way that I trade, I like to have those tools available to me. But for most people, most times, you're just going to be taking a freaking trade off of a gap with discount or a gap off of, breaker. And from that point, you just put your stop loss, put your take profit, and you don't worry about it. But since I'm trying to teach and use different things and showcase different ideas and stuff, I have to show that and provide that logic. But am I using it all the time in my trading? Very rarely. No, this is probably the second reclaimed bisi trade that I'm taking this month. But like I said, you don't even need this because look, there's still PD arrays on the right side of the curve that you should be framing the trade off of. So I didn't just use the reclaimed bisi. I used this all together to frame the idea of why I'd be going long inside of this gap, because now that we're in the buy program, price should be holding this. Let me actually just pull up the executions just so you can see. Right in there. Right. So, and like I said, exit off of the swing high, exit off the swing high in premium, exit off this one, and the last one and get stopped out after the SMT. So if you want to go back and read the or look at the full execution and tape read, that's posted up there, but hopefully that answers the question as to what I'm marking out there. How can you confirm actually, let me scroll up. So how can you confirm a breakaway gap? I seem to struggle on that. There's one Tuesday that I believe to be a breakaway gap, but price fills it anyways. So another thing, right? Breakaway gaps, there's different scenarios that you're going to use them. Most times you're marking breakaway gaps. It's challenging because normally you look at them as balanced. So when you see a balanced price range, especially through, near an SMR, then you have a balanced price range. You have either a bisi or sibi. Let's say if you're bearish, you have a sibi being printed. If order flow is in line and extremely heavy or weak, and you see that kind of signature, you expect that breakaway to be left open. The times where it's going to be filled is where you have ideas like this, where you have PD arrays and premium that are going to hold, and it comes back into discount and then leaves. Now, the one on twos that you talked about, the one on Tuesday, I find this to be exceedingly challenging because in 90% of price action, you're just simply not going to see this unfold, right? Same exact thing in here. You have a gap in discount right after the SMR. And it's leaving in this area of balanced price range. Now you have the same exact kind of idea here, which is you have a premium PD array, probably on the 5 minute chart yet. You have a premium PD array here. that's being traded into and not aggressively enough where it clears it, that's offering this discount retracement back inside the range, which ends up unfortunately coming all the way back down into, you can see this is the first gap in discount, comes back into it. So how to determine breakaway gaps and how to identify them? Most commonly is you see them right at the SMR and it leaves, and you assume that first gap, if it's in balanced price range, is your breakaway gap. You know, other times like this is you have a premium array tags into it, that's going to be seen as your discount imbalance. It's going to be situational. The other time you'd be seeing breakaway gaps is when you have a retracement stage, or basically further up in the MMXM, you have some sort of retracement or like this, offers a retracement, and then the first gap, it leaves outside of that balanced price range, right? Because this in here will be balanced. That first gap you see outside of it either can be used as an inefficiency or as a breakaway gap you see in here. You know, and it's solely just based off of the speed of price action and the displacement it wants to get there. In this case, it's right during the 10 to 50 macro. It already offered the retracement opportunity here, 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 and then it's leaving that gap. I would like to see that left open, especially if there's PD rays that are being printed above that. So a lot of times I won't be trimming my stop immediately to that breakaway gap as soon as I see it form, because I want to see, like, this helps me confirm that it's a BAG. Right, the fact that it's trading into this and holding a premium array, okay, it's probably not going to drop into discount, and that's going to be that used as the breakaway gap. Other times you're going to see what you saw on Tuesday. So I would be more concerned with, okay, if you have a 5-minute order flow flip, that should be keeping you safe, and that breakaway gap should be left unfilled, you know, and not to place too much emphasis on that breakaway gap, because if you see my streams, I'll be talking on stream and I'm like, okay, preferably this gap is left open, or preferably this happens here, preferably this happens here. And sometimes it doesn't go to my, go my way. I read it completely wrong. That gap that was there is completely traded into. So it's more used for order flow and tape reading, because the formation of breakaway gaps themselves are extremely important in understanding the strength of PA, right? If I see a breakaway gap form and then my entry's there, boom, I'm taking that. And not to put everything on the idea that, okay, this is for sure a breakaway gap. You know, sometimes you're going to let your stop include it, other times you're not. So it is a tool that obviously is being used, and knowing where you're going to see them near the SMR and then near leaving balanced price ranges after it gives you a discount entry. If you see those being left open and it's holding premium PD arrays in this case after it, assume it's a breakaway gap. You know, and especially if you have some sort of intermediate term low or high placed on that as well, then there should be no reason it comes back into the breakaway gap. But don't place, if you place too much focus and emphasis on the breakaway gap holding and you have an entry off of that, sometimes it's detrimental in terms of your trading. But like in the examples like Tuesday, you're probably going to get it wrong. I got it wrong as well, because you're going to see the signature. You're going to think, okay, it's pretty strong price action. You got this, and that. Trades in a premium, and then it comes all the way back down. This is either just going to be a stop loss, or you're getting long off of this entry here, already expecting to drop into discount. So yeah, different scenarios. But I would say the things that you'd look for is 5-minute order flow hasn't flipped. You got a premium array. Okay, you got to watch to see, does it give you that discount retracement? Same thing you see on Wednesday as well, as it drops into, and it pops into this premium PD right here. Right, trades into that, comes back into discount, and then it leaves. So that's why I talk about having that filter there. In the beginning helps a lot, but I understand that having that filter also limits you from taking any trades as close as you can to the turtle soup, which as you progress, that's what you want to be taking. So it's a filter. You have to know when to use it, and you have to know when it's likely to do certain things. But that's at least on why on Wednesday I wasn't taking this trade here, or taking these trades into discount, because to me, this I mean, first of all, this doesn't even look like a signature of a proper reversal, right? You look at this range in here, I'm not thinking these are going to be breakaway gaps. That's just part of me looking at price action for this long, but there's going to be different signatures that you see in that break, just like a fair value gap or order block. How do you know an order block is going to be high probability? I think it comes with time, and then it also just comes with what the price action is around it. That should make you assume whether or not this is left open or whether or not it is traded through. All right. How often do you take entries outside of the macros? If you're talking about just 950 to 1050, I think maybe Maybe 40 to 30% are outside of the macro times. I'm always playing with some sort of key time. So if I'm taking a trade outside of the macro time, it's playing around with key time. So whether it's 9:30, 9:50, silver bullet, 10:50, or the 11:30 lunch macro run on stops, I'm always utilizing some sense of time. So in a sense, I guess I'm always trading some sort of macro time. But if we're talking about just the 9:50 macro and 10:50 macro, then yeah, I'd probably say 30% of my trades, or maybe 40% of my trades, are outside of those two windows, either taking a silver bullet or taking a 9:30 trade. Very occasionally, you see a 10:30 scalp or something against the grain. But final hour? No, I don't take any trades the final hour. I'm done cooking PM session. 11:01 was propulsion block. Let's see. I mean, okay, so this is a challenging one. You could look at this as a propulsion block. Now, this is kind of in the blurred lines of what you deem to be a propulsion block or not. If you're saying 11:01 is a propulsion block because it's trading to the 5-minute breaker, I would say yes. But that's still like, that's still tough. It's because the breaker in this case is here. If we're not including the wick, because this is not a green wick, right? You go back to the 1-minute chart, your 1-minute breaker is even lower. Or actually, it's higher. You could use this one, right? So I mean, it's a challenge. This is a challenging one. If you see this in real time, you understand price action for sure. I'm not gonna realistically, I'm not gonna see that in real time. It's actually a good pointer, but yeah, you could definitely deem this as a propulsion block if you're using the breaker. If you're using the standard, this order block, then no. But yes, that would work. And then take the IR on 11:03. Yeah, that's a phenomenal trade. Especially if you get your stop at 11:02 or sub 11:02, phenomenal trade. I was looking. This actually makes sense then if you write it like this. But I was looking for a 5-minute retrace after that, which never happened. But yes, that is a high quality setup that works properly. Yeah, propulsion blocks are one of those ones as well. It's like breakaway gaps of order blocks. You look at different ones like this being a propulsion block, right? This should be a propulsion block. Yeah, exactly. Yep. You shouldn't even see a touch CE. Yep. You trade it the same exact way. So you can touch CE, really shouldn't go past it, and it definitely should not put a close below CE. Unless if it closes maybe a tick below CE, you should see the very next candle just accelerate. And if it doesn't, then it's probably not. You're probably not going to see the price action that you normally see as this as an IR or anything like that. But yeah, that's a good question. Yeah, yeah, that works. That's a very. I mean, you could do the same thing with breakers, right? Put your stop. I don't put it at mean thresholds anymore. I put it below the breaker, but yeah, you could use the same. That's why order blocks are lovely, because you can have these ultra refined stop loss placements when you pair them with a gap that are just beneficial. But yeah, if you got any more questions, put them in the chat. I know there's one more question I think I have to go through from the general chat. So let me scroll up here. Oh, it's from franchise. Oh, okay. It's not really a question, so I'm not going to get into it. But yeah, if you got any more questions, you can put them in the chat. Otherwise, we'll wrap this up. And you can carry on with your holiday. But yeah, obviously, anticipation for Friday is maybe another run up higher. You see all this very low resistance or low volume liquidity all up here. Maybe that's a potential draw for Friday, but we have to just play it very, very safe. Unfortunate if you're in the private group and you're watching that final runner. I talked about DOT and leaving that final runner for DOT. I'm not mad that I did that, and it didn't work out. But you see on NASDAQ, high here, 1143. I was shooting for the next DOT. You have this run up here at 1244 on ES, runs it out. NASDAQ fails to. So that's one of those things that I'm gonna have a hard time anticipating or foreseeing. So that's one of the things I'm going to take a loss on, or not going to get my full pull. So here you see the high of the day is formed post 12, and on ES it works. And then eventually the same exact idea, which is stop loss on NQ was a trimmed stop loss on the last runner. I tried to pyramid in one last time, but basically one candle of doom just came and stopped my partial out. Like this 1309 candle stopped me out. My runner, my stop loss is below the 1102. Sorry, 1112 swing low. So it was a last runner, and things like this will happen. That's obviously why you take partials aggressively, but the idea still panned out, just on a different time for a different chart. So there's that kind of explanation there, and I kind of give a brief analysis as to why I closed it out in the predictions chat. So if you want to go back and review, then you can. Weekend backtest streams. I don't do the backtesting anymore, at least for me, because at least there's no point. But we still do the Q&As, and you're welcome to bring backtesting related questions to those. So we still do them, but not the way that we used to. Favorite dish for Thanksgiving? I don't know. It's a good question. I was trying to think, but I was going to give you a meme answer, but I honestly can't even think of a good one. To be honest, though, OG, you can't, if it's cooked properly, mashed potatoes is goated. But I'm going to get the weird look for that. I think it's just a high quality staple food, man. Would you say that SysD was valid even though it wasn't the manipulation leg, as there was a lower low? Which day are you talking about? SysD was valid even though it wasn't the manipulation. Oh. Talking about this here? Talking about this one? Yes. Okay. Good question. So, change state of delivery. There's multiple different. Okay. Obviously the name of it is change in the state of delivery. So it's a broad term because all it's signifying, realistically, all it's signifying is the entrance of a buy program or sell program as it transitions from the other. So as it goes from sell to buy and as from buy to sell. So there's different ways you can mark it out. All right. Technically speaking, this is the SysD. Okay. That's one way you can mark it out. As soon as it takes out, it doesn't have to close. As soon as it takes out that opening price, that is your change of state delivery. Price is now entering into a long-term buy program. Am I going to be able to see this in real time and understand it in real time most commonly, and be able to get a trade off of it? No. Same thing with this, right? Like, unless you're on a 15-second chart, I'm really not. I think I've gotten these one time, and I got a 13-hour trade off of it. But realistically, it's just going to be improbable, to mark it out as such. So this is still a SysD, right? This is still a SysD down here. Do we mark those out? Most commonly, no. So you're left with another example, which is, SysD from the left side of the chart. When you say, okay, here's a consecutive order block candle. As soon as it takes out that high, that's another SysD. That's your second idea of and that's the one that you normally will mark out. The third one is technically every single entrance of a new buy program would be a change in state delivery, right? So this here, like again, you could mark out this one, but we don't do that most times. That's a SysD, right? Same thing with, I guess, on a higher time frame, like if you go to a 3 minute. Why does it? I need to go to replay mode. This is pissing me off. 3 minute. This would also be a SysD, right? So in each of these instances, you can mark these out as changes in state deliveries. Now, what we're looking for is that sell program a meaningful sell program? Okay. Is the sell program a meaningful? Otherwise, we're going to mark out every single black candle as soon as it trades past it. That's SysD. That's not the way you look at it. So if I'm looking at a change in state delivery, I want to make sure that sell program initially was meaningful. What is meaningful? It either sweeps liquidity or fills a gap. Doing one of those two things, I can preferably look at that as a change in state delivery. So although your question is, okay, it did not rent out this swing low and therefore did not give you a manipulation leg that was lower than this one. That's true. And if we're looking at a very high quality breaker, right, like our best breaker will look like this, right? We say that's a SysD, boom, that's our SysD, and this is our breaker, right? That's what we normally say. Now that would be a very high quality instance, but is that happening all the time? No. So the breaker, the SysD that you're thinking about is this one, which would be this textbook example where this is running out the low, you have a nice breaker, and you look at, okay, this is the SysD. But do we need it to come all the way up to here? Or do we need it to come all the way up to here for it always to be there? No, because sometimes on a lower time frame, you can already tell it's in a buy program here before it even runs out that higher time frame SysD or swing high or whatever it was, right? So that's what I'm trying to determine there is I don't need always the 5-minute signature to give me something. I don't always need the 15-minute signature to give me something because sometimes it takes too long. So what I'm looking for is any instance on the right side of the curve. Once I believe it's in a buy program, it's moving to that DOL, I'm looking for SysDs. So this one here is a SysD because exactly it's running out the swing low. So this either from here starting point or here starting point, this move lower was a meaningful sell program, and therefore you have a market maker sell model. So as it moves from short-term sell program and this market maker sell model down to the swing low here, and it leaves it again, now it's saying, at least the way I look at it, is now it's saying, okay, it's done with that sell program. It's done with that short-term retracement down to that swing low. It's finally now going to enter into a buy program. So sure, this is maybe not the best one that you normally see, but it would work. Same thing with this one, right? Same thing with this one. These are sell programs. This one's a sell program running out a swing low. It's also dropping into discount of this dealing range. So that would be, when I mark this out as a SysD on stream or trying to take a setup off of it, that's what I'm looking for. And you could also say this one is too technically, but I think that's a little bit too close and not the one you'd be eyeing down. But and same thing with this, right? Like would you look at this as a change of state delivery? Probably not, because it's very hard to see this as a market maker sell model or this run lower as anything meaningful. Same thing with this, right? You can mark these out just really as order blocks, but as soon as it's taking out the swing high or taking out the opening price, that function is a change in state delivery. In the future, it's referenced as an order block. Order block is a PD array. A SysD is kind of like like manipulation. Manipulation is not a PD array. Manipulation is a function. So it's a good question, but yeah, it's tools that I'm looking to see. Is there a buy program now in place? Because if there's a buy program in place, I can take every single 1 minute or 15-second PD array after that, and it'll work. Okay, when I'm going to trade, like off stream, this is what I do. Identify a bias, blah, blah, blah. I drop down to a 5-minute or 1 minute, and I'm waiting for a 1-minute signature to give me a 1-minute SysD. Okay, then I go to the 15-second chart, and I take any 1-minute order block, fair value gap, breaker, volume imbalance, immediate rebalance, mitigation block, any PD array you can name, as long as it's there, I'm taking it. Because now I know where to place my stop loss, which is the most important part. And I know that my entry is going to start to hold because price is now in this meaningful buy program or sell program. I'm not interested in trying to bottom tick this discount, because to me, I'm going to miss it. And sometimes that's just going to happen. Instead, I'm trying to capture, okay, even if I miss entering here, if I can enter here off this, off this volume balance or whatever, and place my stop loss underneath the order block, this here is sometimes a better trade, and it will also show up way more often than me trying to take an entry here on discount and put a stop loss here and take a trade up to here, right? That's only going to maybe happen 1 or 2 times a session, maybe even 1 time, two times a week. This perfect discount entry, boom, I get it, and it's just, you milk it all the way to the top. But what's always going to be there is a short-term stop run. What's always going to be there is a short-term SysD. You can see this is a 4.87, taking it from here to here, maybe not bottom ticking, but that's better than what you saw before of a 2.81 on the other side. That's why I like that model, because I know it's going to be there every damn day. I know it's going to be there every 20 minutes. So I'm not worried about, oh, where's my entry model? I'm just worried about, can I get on sides, identify a proper bias, and I have to make sure that price action is clean. If it's not clean, I'm going to get stopped out. If I don't know the bias, I don't know what I'm looking for. So as soon as I can determine those two things with high confidence, I'm literally just at any given time, basically any time that I wake up or pull the charts, I'm taking the trade towards there. So I talk about key times and stuff, but that's the reality of it. Obviously, I'm implementing those elements and I want all those elements to be there, but entries are piss all when you really think about it. They really just don't matter. Like, I feel like as you advance as a trader, you realize that, but I obviously have to go through them and explain them because there are optimal points of getting in and suboptimal points of getting in where you have to suffer a lot more drawdown or have a large stop loss to accommodate any movements in or out of that PD array, right? So hopefully that helps. Long-winded answer, but hopefully it helps. Watched the review from yesterday, was thinking this question is, so, yep, of course, no problem. Prop versus personal capital. Which one do you prefer? I mean, there's obviously drawdowns to both of them. I think the best way to go is personal because you got no rules, but prop is also free capital for as long as it exists. So in terms of risk to reward, prop firm is by far the better one. In terms of, I think, scalability and, not have to worry about stresses, and also for longer term, keeping an account, personal is the way to go. And everyone should be segueing into personal capital or having both as you progress. Would you say a SysD without a gap is lower prop? Yes. Or as long as all confluences have been met, it's all right. I think a SysD with a gap will infinitely always be better than a SysD without a gap. When you have the gap, normally with the SysD, you can just trade off the gap with the SysD. If you don't have one, it's not necessarily terrible, but you have to still look for other confluences. So I guess to briefly answer it, no. Sorry, would you say a SysD without a gap is lower prop? Yes, it is lower probability. If I see that, I have to make sure there are extra confluences that would make it so I'm taking the trade. If I do see the SysD with the gap and I'm already looking for longs, I'm probably going to take that first one. All right. Kosami, I saw you just hopped in. I answered the questions you posted earlier with context, so I'll send this recording up later today, and then you should be able to find the timestamp pretty easily and see if you can, if the answers answered your question. All right. You got any more questions? You can put them in the chat. Otherwise, we will wrap this up. Yeah, no problem, man. I like the profile picture too. Shout out Gru. Where would the second stage of reaccumulation be in that market maker buy model? Of course, no problem. So, second stage of accumulation. There's a couple of things you can look for. Number one is positionally, where is the second stage going to happen? 75% of the way up from the implied dealing range, but basically just the swing low to terminus. So the swing low to terminus would be, let's go to the 1 hour chart and mark out that buy side again. I'd say that this previous weekly high is terminus, okay? And we're using the market maker buy model from, you could either pull it from the 7 a.m. SMR or you can pull it from here. I'm just going to pull it from here, okay? This low to this high. Grading. 75% of the way we should see our silver bullet, okay? Another thing we can look at is the last manipulation leg of that respective range and look for -1 to -1.5, okay? So either you could pull it from here. Now, I know this is not the last manipulation leg, but either way, it would work for, all intents and purposes. You could also use the one over here. This would also be fine. You click out -1 to -1.5. Either way, doesn't matter. But preferably, you would see it in the -1 to -1.5 of a last manipulation leg. We don't have a clean one here, so we'll just forget about it for learning purposes. But a couple of things. So 0.75 of the way up, preferably. Okay, you have -1 to -1.5, -1.5 on the standard deviation. You also should have time involved. So in this case, since we're talking about the New York session, your second stage reaccumulation will most commonly be seen during your silver bullet window. Other times it can happen before or later, but when we're talking about general purposes, this is where you'll see it. And obviously, in terms of PD arrays, you want to see some sort of gap and sometimes an order block as well. But most times it's just a fair value gap in the form of a bisi or a sibi. Okay, so these are the rules or the objective criteria we're using to determine where this is likely to be. Time frame doesn't really matter. It should be anywhere from a 5 minute to 1 minute. But you see in here, 75% of the way up is this green line here. Okay, this is our 7.75. And you can see in here, we have a fair value gap trading into. And you have, in this case, fails to drop into discount. Now, I would have liked to see this in the last stage macro from 1050 to 1110. It's slightly outside of that 1112. So whether or not you want to incorporate that is not super important, but I guess something to look at. So when you're looking at last, a buy opportunity, second stage, most times it's not important that you say, oh, this is the exact perfect one, because what you're going to end up seeing, especially in a lower time frame like this, is you end up seeing that there's probably 3. So we could say this is our silver bullet, our second stage. We could say this is our second stage. We could say this is our second stage. What you're really looking for is a fair value gap and premium that is going to hold price as it moves towards that drawn liquidity. So, I mean, if I had to say which one's the second stage, I would probably pick either this one or this one. Okay. That very last run before it runs that buy side stems from here or stems from here. So that would be the 2 that I'd be focusing on in terms of, and if we really want to get down to it and you take this all up to the high, then that's probably the one that's more likely to be proper silver bullet. Now it's outside of the time window, as you see, and it's missing a couple of things, but that'd be the way you look at it. So to give another example, let's look at Tuesday. Another example where it's quite difficult to see, but you have your swing high to expected terminus up here. Grading. You can see right in here, you have your silver bullet. You can see it as this one, you can see it as this one, either one. So a lot of times it's going to be a very easy trade to take if you know what you're looking for, which would actually be not discount of this question, of this example. A lot of times if you're bullish, you'll see just the premium gaps hold, or like a premium gap plus a mitigation block. If you get a premium gap plus a mitigation block inside that -1 to -1.5, that is crack cocaine. That one will be fantastic to use, especially if it's in line with your bias. Last question. I tried to trade the MMSM on the 930 manipulation a leg lower, but got stopped at the breaker leg up. Any tips on why it shouldn't be wise to enter there or wait, or was there a good entry either way? So I normally say to wait for the manipulation leg, because when you draw it out, okay, you're trying to trade this part of it instead of trading this part of it. So ranges are going to be smaller. Time of expansion is going to be smaller, especially if you're looking at something like a gap and you're shorting it at 930. Do you take it off the top of the gap? Do you take it off the bottom of the gap? Do you take it off, some sort of liquidity pool after that? I find it challenging to trade the manipulation leg all the time. There's certain times I'll do it, like on a swing to Z day, where you're not going to see this leg be clean. Then sure. But for most people, most times, trading the manipulation leg is just going to be something that's a scalp or ill-advised, especially when you have, if you look at the 2 differences, which one do I want to be trading? I want to be trading the session direction, so easy peasy answered there. Now, that being said, there's still going to be times where you may be taking this trade, and that's perfectly fine. But as a result, since it's the manipulation leg, you're not going to see PD rays hold like they typically do on the right side of the curve. So it stopped at the breaker leg up, which I assume is this 1009. That at this point, I mean, when you look at it, it's already in a buy program. So I don't, you look at entry from 9:51 down to 10 o'clock, you got 9 minutes of expansion. On a 1 minute chart, you don't see any sell PD rays that really can be used. I mean, besides maybe this breaker, taking immediate rebalance off that, it's pretty challenging. And also in here, you got a 15-minute gap in discount they're trying to shoot for. So I don't think there's probably anything you could have done better in here, depending on your entry. And like you can even see, like you got just clean manipulation, no entries short, very few at least. And by the time it even gives you an entry off this gap here, if you look at this as a short entry, it's already actually in the buy program. So I try to trade both in the manipulation as a scalp, and you mentioned it, but of course, as the expansion is the main move. Yeah. So in my past, I try to do the same thing. I try to take the short at 930, take the long at 950, and take the continuation at 1050. from my own experience, after about 5 years, that is just something that is very, very challenging to do. Because I can be wrong. You know, if I'm bullish and I expect, okay, let me take a short at 9:30 and it displaces up. You know, look at Monday, right? Monday, you could say we're bullish and I want to trade the manipulation move. I want to try and short it, you know, or whatever. You're going to get caught up. And then as soon as it starts doing this, you're going to start shorting it. And then as it starts trading up, and you're like, oh, we're actually in the distribution. You're going to go long. And then you're going to get stopped out on a proper retracement. So less is more in trading. So I know it's enticing, and I know sometimes it's actually used as a coping mechanism, which is, oh, if there's tons of moves, let me try and get both. I think you're going to end up doing more damage to yourself, and it's going to take longer than you'd expect than if you just trade the distribution, because it trains patience, it trains trust in yourself, it trains trust in your bias, trust in your entry mechanics, all that. So there are entries on both sides. I'm not saying that trading the manipulation is a bad idea all the time, but I think it's a bad idea in trying to say that you can trade or you want to trade each of those moves in the same day, because to be honest, you're making the job way harder than it needs to be. You know, just take your one setup, win or lose, you'd be done. You know, and I think if you spend more time on that, you'll find it to be a lot easier, and you'll find success a lot easier. And I would also encourage you to see if there's any psychological bits that are holding you back, and you're using that as kind of not an excuse, but I guess to be realistic and to be upfront with you, maybe as an excuse to be impatient or be whatever, where it's sure it's true and there's always some truth to it, but underlying behind it, it's kind of hiding or running from maybe a problem you had in the past or something you don't trust in fully to be there, you know, when we're the distribution. And sometimes it could be just too tight of an entry model. That's as simple as it is. But I see where you're coming from, and it's perfectly reasonable. Exactly. Yeah. Yeah. In my mind, if I can recognize the manipulation is easy and it's clean and the trade is profitable amount, if not, the expansion is second try for the day. It makes sense, right? I would just say it's just a lot more challenging. Like the manipulation, like to trade on it 4 times as more challenging as, you know, the long. And you could probably see it just from the Wednesday PA. But yeah, you know, it's you're playing with fire a little bit there, where you got to be really careful, because even the mentality of having 2 trades in a day gives you a little wiggle room where, you know, that first trade isn't going to be that good. You know, the first trade, even if I lose on, I got a second try. That mentality itself is like sometimes detrimental, because you're putting yourself in far drawdown, or you're not even, every single trade you take should be A plus, right? I'm not going to take a B plus trade here because I can take an A plus trade later on. When you put it like that, it doesn't make a whole lot of sense. Obviously, these are all my opinions, and I'm saying this because I've done it before and it didn't work out for me personally, but some people can do it and are phenomenal at it. So I'm not going to say, but I also got to drop at least some of my opinion as to that specific trading style, because I find it more challenging than, you know, buying here or buying here or here or here or here or here. You just have so many more opportunities that psychologically I think have a benefit. I see. Yep, exactly. And there's the flaw, right? So notice a lot of my losses were caught between 10 o'clock and 10:30. Probably in the beginning of your trading, when you're trading the silver bullet, right? Silver bullet, oh, it's easy for value gap towards drawn liquidity. Boom, it's going to be there every day. End up taking losses during that model, and then you have other things that you learn to try and cover up that little error. Perfectly fine. But I think especially now that you have more understanding on price action and you know, more different ways of getting in, I don't think it's just something to look at. All right. And I'm going to be real all the time. So I'm just telling you that. I'm not saying it's a problem, but it's probably something you want to look into, especially when you talk about progression. My goal is to be trading 1 time a month and hit my entire monthly goal. I don't want to have to be trading 4 times a day, you know? So as the more you can try and go to that side of it instead of trading more, you'll find a lot more progress in trading less than trading more. All right. When we get in that key time and key price vid, I made a key time video that's unlisted currently for the PDF chat, and I don't think it came across the way that I wanted it to. I mean, it's a very just logical video that has a lot of information. So I may release that to the public, but for right now, it's just going to stay in there. In terms of key price, key time combination video, I may put one out, but it's not a very complicated thing where I don't want to overcomplicate it and make it some big video when in reality it doesn't need to be. So we'll next review stream, just remind me, and we'll go through it briefly, and we'll crack it on. But yeah, I think yeah, we could look at Tuesday's PA or anything like that and try and sort it out. But I don't want to make it a bigger thing that it is. You know, key time, key price. All you're looking for is just bias, PD array, key time. All right, 15-minute, 1 minute, 5 minute, 15-minute, but really realistically, 15-minute chart, 15-minute sweep on liquidity, 15-minute gap within 7 to 10. There's your entry long. You know, if you're bullish, same thing. Flip it if you're bearish. That's really all key time is. It's just making sure that those two are in agreement. And at that point, you trust that order flow is going to start moving. You know, love the idea of it as a target, but I see as developing student trying to find more trades isn't. I see as a developing student trying to find more trades isn't more data points to get feedback and develop. It is. And you're a very smart student for thinking that, because that's it's true, right? You want the most amount of, if you're training shots, right? If you're trying to get good at basketball, you want the most amount of data that you can influence yourself with. But I think if you end up taking trades off of it, you're sometimes blinded by emotion, especially even in your review, because you're more concerned with how do I fix this entry or fix this trade more than the analysis part of it. So that's true. I think you should still study it and still look at it and understand it, and don't avoid it. It's not what I'm saying. I'm not saying avoid it, but I think even if you just study it in hindsight, and obviously in real time as you're watching the charts, studying it as it moves, so you understand what a proper manipulation looks like, and understand, okay, here's an entry here. If I needed it to be on a low probability day, you're still getting the reps, and you don't have to take a trade to get the reps in. Sometimes all it is to get the reps is just look at it while it's happening and look at it while it's done. And at that point, you have a problem set. You try and decrack the problem set as it's printing. And at the end of the day, you have an answer key, and you're reviewing, and boom, you have the shot, how to review it, and you get that rep in. So don't think that you have to take the trade to get the rep in. I think that's perfectly reasonable, and I understand where you're coming from. But what's end up actually going to happen is it takes a way lot longer than it needs to be because of that practice, which is trying to trade everything to get reps in. And it's a perfectly logical idea, but in practice, sometimes you have to incorporate the human part of it, which is you're going to be blocked. It's going to be foggy. Blocked vision when you're looking back at that, and you have an execution overlaid on it. There's going to be some sort of filtering that your brain is going to do to not approach what's uncomfortable, what you can't see. But hopefully that helps. So I stopped giving so much emphasis on taking the trade when tape reading this period. I'm focusing on journaling at the end of the day. Exactly. That's what you need to be doing. Yep. Post-day review. I'm telling you, if you do post-day review, meaning after the day is finished, you delete everything off your chart and you start from H4 or H1 and you go all the way down to 1 minute and you screenshot each time frame, what's important at each one. If you do that for a month straight or 2 months straight, you will see the highest amount of increase in your tape reading ability and understanding of price action than you will if you do anything else. I did it for about 3 months, and I think I saw 9 months of progression in those 3 months than I did if I wasn't doing it. And I still encourage anyone who's not doing that. It is, if you want the missing cheat code or feel like you're missing something, that is the most OP thing you could do, I think, is read it in the morning, work on it like it's a worksheet that you don't know the answer to. Get that experience of walking into the unknown. Then when the day is finished, you're developing your own answer key. So now you have the experience of watching it live and what that feels like and what that looks like. And then you have the answer key of what actually happened. And now you can compare and review and make sure that it understands. Yep, exactly. Yep. If you look at my Notion, it looks exactly like this. Eventually 8 months from now, you'll have thousands of screenshots, but yeah, you're doing well. This is you're on the path for success. I'm telling you, if you keep up the work ethic, you'll be profitable in 3 months. But good things, good things. Yeah. So we'll wrap it up here. We've been going for about an hour and a half here, so we'll try and keep it to this. Obviously, so Kosami, your 2 questions are answered in this video. Probably around the 30-minute mark or so, or 45-minute mark. That's kind of a rough time. If I find it narrowed down time, I'll send you a message. But make sure to check that out. Yep, Divyansh, I'll make sure to check your DM as well today. Obviously, you got any more questions, reach out to me. You can put them in the general chat or shoot me a DM. PDF is on sale for the next 3 days, so that'll be the lowest price you'll see for the rest of the time. So if you want to pick that up, let me know, or shoot the admins a DM, and you can pick that up as well. All right. So hopefully you enjoyed. I appreciate you guys spending your time on this holiday with the prophecy and with these streams. Hopefully it's insightful as always. So enjoy the rest of your day. I will talk to you guys probably on Sunday or Monday. I assume Monday. I'll be out of the state from tomorrow till Sunday, so probably pretty slow in terms of Discord stuff until Monday. All right. This will be posted later today. Yep, I'll start uploading it as soon as I hop off here, and it should be done rendering in about an hour or 2. Okay, and I'll send it to YouTube vids as usual. So enjoy your weekend, enjoy your holiday, be safe, spend some time away from the charts, and I will talk to you guys, Lord willing, on Monday. So take care and peace.